All right, the rest, can you guys hear me? Give me if you don't have a mic, give me a reply, please. A message box, so I know that everybody can hear me. It's okay. We can start. Okay, Fong. Okay, good. Jamie. Okay, good. All right, right. Okay. Okay, good. Everybody can hear me. Let's start. Okay, so today I only have a few currency that I have in mind. So what I'm going to do is instead of me just talking about the currency that I'm going to talk, I like to ask you what currency you are looking at right now, and we'll look at it together. Okay. Now, the first pair that in my mind is this New Zealand yen. Can you guys see my chart?
Yes, Ben.
Okay. Now, I'm bullish on the yen cross because as you can see that the VIX is 16.5, right? It spiked to 21, and then it backed down to 16. Right. So it tells me basically the market is more willing to take on risk than avoiding risk. So if that's the case, I would like to look for a bullish play on the yen cross, right? But it doesn't mean that I cannot take a short on the yen cross. As I mentioned, if I am trading on a very, very short time frame, then it is okay, right? Because example, I'm in and out in a couple of hours, that kind of thing, right? So it don't really affect me the big fundamental. Okay. So I'm risk on, therefore I'm willing to take on look for long on the yen cross. The first pair that I look at is New Zealand dollar. Now in New Zealand dollar, you can see on this daily time frame, right? We see the price actually. Let me get the drawing tools. Okay, we have right from here make a low. Okay, clearly we see that it is in an uptrend. Okay, and the last validated low is this one. We call this higher low. All right, why we call this higher low? Because it make a high higher than this high, and therefore this is a validated low. Now this is not a validated low, right? Simply because the price did not make a high higher than this high, so this is not a validated low. Okay, so now what's the difference between a validated low and not validated low? Now for validated low, usually they are the area or swing point, high or low, swing low, where price tend to respect, right? Those not validated low tend not to be respected, right? But it doesn't mean you will not respect it all the time, but the probability of it not respected is higher than the validated low, all right? So that's why you can see that if I move this away, you can see this, the price actually over here in a very short time frame. If we just look at this time frame only without looking at the rest, this is in a downtrend, right? In the smaller time frame, it is in a downtrend, but in a bigger time frame, it is in an uptrend. So this downtrend is simply a retracement to this uptrend. So we are looking to long. That's perfect. And plus, it is a risk-on regime, right? So now, where do I want to look for a long? Obviously, the last validated higher low, which is this one, right? So you can see the price actually respect here, and it bounce off. Okay, it bounce off. So now I know that from the higher time frame, I'm going to look. I'm looking for long, right? So now the thing is, let me remove this. Okay, now see better, better. So now we mark the high and the low, validated high and low, which is these two green dot, right? So price right now is trading within these two green dot. Okay, So if the higher time frame, example daily, is uptrend and the price make a high and it start pulling back, right? Now I can see that if I base on daily time frame high and daily time frame low, the current price is actually low, right? It's actually low. So for me to look for long, it is perfect locations. Okay, so this is based on daily time frame. Next, I'm going to zoom in now. Sorry. Before I go to the lower time frame, now if we say that this is going up, right? The price is going up because it is uptrend. Then where is the target? Well, the last high is here, so that means that the target is going to be 80.18. That will be the target for this up move. Okay, so that is my target. So all these likely to be taken out. The target is going to be this high. Okay, so now we have defined our trend, our buyers on the higher time frame, and we also define the location on higher time frame. We also define the target for the higher time frame, right? So now we go down to a lower time frame, 1 hour time frame. Now in 1 hour time frame, we are actually trading this area, which I showed you just now. We are trading this area, right? This is a small time frame activities. Okay, so now we are going down to lower time frame. So in the lower time frame, we can see that it was in a downtrend before, right? Okay, we see a downtrend, and we see the price make a higher low, and it move higher as if the price is going to reverse, but it did not reverse, right? It did not reverse. So what it did was it make a stop hunting. So we saw that there is a stop hunting on this, right? This high, it grabbed all the stop and it moved all the way down, right? Why it need to move all the way down? Why the price need to move higher to this area? Why the price need to move higher to this area? Because the price want to sell, right? So if they want to sell, they need to have buy order to fit them, right? So they move the price up, grab all the stop loss here, so they can move the price down. Okay, so why the price want to move lower? Well, they want to take out all these stop loss. Okay, why the bank want to move down to take out all the stop loss? Because the bank buyers is up. They want to move out in the future, so they want to get rid of all these buyers first before they start moving the price up. Okay, so that's what we can see from this 1 hour time frame. So after the price make a stop hunting, we see the price actually start moving lower, right? To again stop hunting on the lowest on the stop loss located at the swing low. Now we are trading this time frame. Now can you see now we are going into lower time frame again. This we are trading. We are looking at this time frame right now, even lower. Okay, so just now we say 1 hour, but now we are trading this orange box even lower. Now from this orange box, straight away you can see that it is in an uptrend, right? So on the 1 hour is a downtrend. So sorry, by the way, just now what we see is on the daily time frame, right? It is uptrend. So we are looking to buy because that is a higher time frame. Okay. Now when we go to 1 hour, it is downtrend, which is perfect because we want to buy and the daily 1 hour time frame moving down, right? So that we can buy low, which is correct. Okay. Now when we go down to even lower time frame, I'm not sure what time frame to give this, but let's say just say that this is 15 minutes time frame. We are uptrend. Okay. So if we are uptrend and we are looking to buy, so obviously I want to buy when the uptrend start pulling back, right? So I will define my range in this 15 minutes time frame example. This is just example, yeah. So I'm going to wait for price to pull out lower, right? Then I look for a long trade, right? So I hope this is clear enough, right? So that's what we're going to do right now. We're going to look at this area. Okay, so let me remove this. Now, over this small time frame, we can see that it is in an uptrend. Okay, we see that it is in the uptrend. The price make a low, the price make a higher low, the price make a high, the price make a higher high. It is in an uptrend. So now we define our range, the high and the low. Okay, we have defined our range, right? The price break the higher high, higher than this high. Why the price want to make a higher high? Because there is a reason the price want to do that, because the target is this one. Right? In this small time frame, this is a target. Look at the gap here. They need to fill this gap. Look at the trap order here. They need to unlock the trap order. So these are the reason why the market is making a higher high, because the price need to go up here before even it come down, right? Or we might see the price come down, then go up. All right. We do not know what they want to do, right? Because it can do either way. Okay. But we have this in mind. So now we know that in this smaller time frame, it is uptrend. So we define our range, right? The high here, low here. Okay. Now this is a huge gap again, right? You can see that the price pull back, it fill up halfway. Okay. So potentially, I think that the price might even need to come down to fill the rest of the gaps before you want to move higher. Again, we are not sure, right? Also, I think that the price might want to come down. Why? Because there's a trap order over here. That you need to unlock this trap order before the need to move higher. Okay. And the location wise, we can see that it is high. All right. The price might want to come down lower. So the bank will want to buy low. The bank will never want to buy high, right? Imagine if you are the bank, you look at this price. This is a swing low. This is a swing high. Now you have a bias that you want to buy. You will never buy here. You wait for price to come down lower here, then you buy. Or you wait for price to break out higher, pull back, and then you buy here, right? Either way. Okay. So now the idea for this is we are waiting for the price to move lower to fill this gap, right? And this trap order as well. So these are the things I'm looking at right now. This whole thing, sorry. So I'm looking at this area, entire area, right? So now if I take I will prefer the price to come lower, at least 50%. Let's say give a 50% estimation. Now this is a 50% line. Okay. So if I want to go long, I want to go long somewhere here. Okay. So now I know where I want to do business. This is my point of interest. Okay. I just showed to you. This is my point of interest. I only want to look long when the price come here. Okay. So now this is 1 hour time frame still. Now when the price come here, right, I will go down to a low time frame and look for the pattern, the trade, the setup I need to see, right? I will not want to just simply put the buy limit and put the stop loss, buy limit and stop loss, and just hope for the best, right? That is provided if I really have to step out and I don't want to miss this opportunity, then I'll put my buy limit, my stop loss, and then I walk off and then I off my computer. But if I'm able to in front of computer, and I believe that this can happen tonight, all right? And if the price want to come down, then I will rather define my point of interest, and then as the price come now lower, I go down to a lower time frame to see the kind of setup that I need to see. Then I go long. Okay. So if you go down to the 50 minutes time frame. So now you can see I'm not trading off the 15-minute time frame. I do a top-down analysis, right? From daily for 1 hour, right? And all the way down to a smaller time frame to pick my entry. Okay. So you can see that this is now when we go down to 15 minutes time frame, we can see right now that this is really stand out like a sore thumb, right? The price need to come here. right? The price hasn't come here yet. They need to come here to unlock this trap order before it go higher, okay? Or if the price decides to go higher, it has to come back lower as well before even go higher. So I think that if they have to go higher, then come down lower, there's a lot of work, right? A lot of work for the bank. So I think the bank will likely to move lower, right? To fill this gap, to untrap this order, unlock this trap order, then it start moving higher. Okay, that I think that is a higher probability scenario. Okay, and I put my alarm there 7700, right? Because later when a New York market open, I have to go switch to option, right? So I really have to monitor two market, no time, right? So I put my alert. If the price come to this area, I will not go long. When the price cross this line, right, I will start to look for the pattern I need to see. Okay, so I can even go down to 5 minutes time frame. Again, I'm not trading all 5 minutes time frame. I look for the entry, right? But my analysis is already complete using the higher time frame. Now, if I look at the lower time frame, like 5 minutes time frame, now since my bias is up, and I think that there is a high chance that the price is coming down, right? And I want to buy somewhere here. Now, then I might, if I'm a risk taker, I might look for opportunity to sell here and go down, right? And take my profit here. Okay. So let's take a look at the potential risk reward that we might have if we sell. Okay, we sell. Let's say I managed to get somewhere in here. We get ready to get our trade. Once this gap fill, we stand by to get out. Our stop loss at the high. Okay. So if we able to get somewhere entry there, so our risk reward is about almost 1 to 3, almost, like I say, right? Now, what if the price can come down all the way to unlock this trade order? Then our risk reward can be 1 to 5, right? So there is a potential risk reward for us to short, but always bear in mind, if you sell, you are trading against the uptrend, right? So that is the risk that you have to take. Okay. So now again, before I take the trade, let's assuming I want to take the short, right? Then I want to see now, what do I see here? Well, I see there is automatic this PS preliminary support, buying climax. We have the automatic reactions. We have this test of this high, sign of weakness. Then what we see is we have a Utah. Then price come back to test, and then test. This is the last point of supply, and then the price break. The price break this trading range. Can you see now? So this is a trading range that already broken by this ERC down. Okay. So now, when the price start to pull back, can I look to sell? Yes, I can look to sell. Right. So now, when the price retraces to this area, I will go look for a pattern again I want to see. And do I see the pattern I need to see? Yes, this is the pattern, right? You can see this is the pattern. So pattern within the pattern. I don't just put a sell limit there, my stop loss. No, I don't do that, right? As the price retraces back up here, I look for the pattern I need to see. So what I did was I can go down to 3 minutes time frame. Okay, do I see what I need to see? Well, maybe, yeah. 1 minute time frame. Now this is better. I see something, right? You see this. Now what we see is we see this in the 1 minute time frame. We see another distribution. We see that there is this this look like PS. We have another PS buying climax, right? A Utah up trust, a test. This is the up trust. This is a Utah. Okay. So now what we have, then we see what the price actually break. Did the price break? Well, sorry, there is the preliminary support is here, this one. Okay, so now did the price break? Let's take a see. Let's take a look. Yes, price broke, and the price after break this, or the support here, it pulled back. This is an aggressive break. Then it pulled back. Now, one thing is you can already sell, right? You can sell at the market because you are trading on the off the 1 minute time frame, right? Now, see what happened? The price started to move lower. Now, one thing that is actually I concern is this gap. This gap not filled yet, right? So we might see the price come down, might come back to fill the gap. So my stop loss has to be here. Okay, because we do not know whether price come back. I don't know, right? Okay, so that is a trade there. Is it clear? So now where are we going to take profit? Well, my analysis stopped from the 50-minute time frame, right? My analysis from the 1 hour time frame. So where's the target? Well, my target is going to be filling this gap, which is at least 77, and then potentially this trap order, right? So I get in here. So now you can see that our risk reward is very good, right? 1:4 if the price can come all the way here. Can you follow me, guys?
Yes, Benny.
Any question on the New Zealand dollar? New Zealand yen, sorry.
No, it's quite clear.
Yeah. All right. So okay. The other one I'm looking at is a yen. This euro yen. Okay, euro yen again, the same thing. I'm looking to go long, right? Clearly, it is uptrend, and this is actually a pullback. You see the price in the uptrend, and this is actually a pullback, right? Down, bearish pullback, right? So we are looking for long. Now, where is the last validated higher low? Well, this higher low is already taken up by this. Then the next one will be this one. Okay, and this is very, very shadow, right? I think the better one will be this one. Okay, this is very shadow, not reliable, I think, right? This again same as this one, not very shadow. It's not, it don't have the cup shape. Remember, this is not a cup shape, right? It's more like a staircase, right? If you write supply demand, cup shape is more reliable compared to a stair step. Okay, so this is a cup shape. This more like a stair step. Okay, less reliable. So now, this is also validated. Okay, so now we are looking to look for a price react at this demand, right? And price already in this range. Okay, in the range there, so we can start looking for long. Now, one thing which I also concern is this. You can see I put the arrow there. The multiple low there. I think we have a couple of times the price as it stock come here. It means that there are a lot of stop loss below those low. So the bank also can see that, right? So I think the price is likely to do is likely to come lower to grab all these stop loss and unlock this trap order. Then over here, then go up. The target is this, right? So I'm looking for long, but not at the current level. I'm looking for lower here, around here, because I think that the bank want to grab this stop loss. To the bank, this is money, right? They will never miss because since the price is already so near. And now, especially you can see that after the price makes so many low, then it make another low one more time, right? Multiple times. So I'm very sure it's coming down here. Okay, it's coming down here to grab all these stop loss. Okay, so that is what I see I'm looking for long. Now, as we go down to 1 hour time frame, now since I'm going to long in 1 hour time frame, it is in a downtrend, and I'm looking for price to come down lower, right, to grab all these stop loss. So can I look for a short? If I want to, can I look for a short? Yes, I can, right? I can look for a short. So I can see that we are in a downtrend in a 1 hour time frame, because if I'm trading like a very short time frame of the 1 hour time frame, you can see that we are in the downtrend. Right? We are in the downtrend. We are still in the downtrend. The price has not. All right. This is a stop hunting there. So I think the price is coming down. We are in the downtrend. In a smaller time frame, we are in a downtrend, right? Before it move up. So if I want to, I can also look for a sell. Okay, now where do I want to look for sell? So again, the same thing. I define where's a range for the lower time frame, like 1 hour. Well, this is a high, this is a low. So if I want to sell, the current level is definitely too low for me to sell. I do not want to sell here. I want to sell higher, as high as possible, maybe this area. Okay, so now I look for, is there any reason for the price to move higher? I can see that there's a gap here that need to be filled. And this gap also locate at least 50% of this whole entire range. So this will be the area that I'll be looking for a sell. Right? So as the price come down, take partial profit, and then price come down, take final profit. Right? Before I start looking for long. Okay. So, but if the price continue to fall without pulling back, then obviously there's no trade. Okay, so you can see on this euro yen, also I have marked 2 levels so that it will alert me once the price go there. One of them is 130.60. It means that once the price rally up here, right, I know that I have a potential short trade. That if the price didn't go up there, it's okay because I'm waiting for price to come down lower 129.60, and then I look for a long here. Like I look for short here. Okay, so that is my plan for the euro yen. Okay, my overall bias is up because it is risk on, right? But in a very, very short time frame, right, I can look for a short opportunity. You can see here, right? Like that. So imagine if tonight the price can go up this area, okay, then give me an opportunity to short, right? And I believe that within the few hours, right, if the price want to come down, it will come down, then already I close my trade. Okay, so the big fundamental, the macro don't really affect me if I'm trading such a small time frame. Okay, follow me, yeah. All right, so now we are going long. Now you might say, okay, Ben, how about can we go long first? Can we long here and then short there and then long again? You can, right? But provided there's enough risk reward. Now, because what do we see right now happen in this pair? Now we can see that this is this range, right? We can see that this is high, this is low, this low is lower than this low, right? So we can see that the bias is down, the price want to go lower. So if I go and look for a long trade, well, it is counter trend against what I see right now, right? What I see right now in such a small time frame, the price simply tell me that you want to go down. You can see that this is a low, then you make a high, then you make a low, right? So the price right now is here. So this is low is taken out by this low. Now, why the bank want to move the price lower to take out this low and make a lower low? Because the bank intention is going lower. Okay, so if the bank intention is going lower in such a small time frame, right, I prefer not to go long, right? Because price might just pump down, right? I rather wait for price go up here and then short, go with this bearish bias. And once the price reach this area, then I go with the bullish bias, long. Okay, so then we have to wait. That is, these are the 2 pair I have in mind for tonight, right? I don't see any other opportunity. But if you see any opportunity, you can always let me know, and we take a look at it. Okay. Kenbun, how are you doing now so far? Are you still in long go? Oh yeah, one more pair that I'm looking is this Aussie yen, so not Aussie yen, pound yen. Okay, pound yen again bullish. I'm looking for long. Right, look at the bigger time frame. You can see that it is bullish, and this is simply a retracement lower. Right, you can see that this is just a retracement in this big uptrend. So I think the price is likely to go higher. Right, you can see my arrow there. I think the price is likely to come down lower. Right, tap into this demand before you go higher. Okay, that's what my bias. But since again the same thing, since the price is here, can I look for sell here and take my profit here and then go for long again? Yes, we can if there's good enough risk reward. Okay, so let's take a look at the 1 hour time frame and see. In a 1 hour time frame, we can see that it is in a downtrend, right? Downtrend. Okay, in now the price break this high. So over here, it looks like it turned bullish. We do not know yet. It looks like after the price take out this high, it go into consolidations, right? It looks like price want to go higher, but we are not sure, right? So this is bearish before, but until here, it looks like price change. This area, it start to go sideways, indecisions, going consolidation. They start to do a lot of stop hunting again, right? So I do not wish to participate when the bank are stop hunting. I let the bank show me where you want to go, but basically I like to look for a short trade in a smaller time frame, right? Because it is in a downtrend, right? So I'm looking for a short. So if I'm looking for a short, where do I want to sell, right? I can see this is my circle. This is the last validated higher lower high. So I think the price likely to move to this area, right, before it go down. So now if I take a look at this area, like I say, I can always wait for price to come all the way lower to this area, then I start to go long. But if I can see there's good enough risk reward and I can sell here and TP here before I look for long, I see if I can see the risk reward is fantastic, then I'm willing to do such trade, right? So so right now it's consolidate. I'm not interested. I'm only interested when the price come to up, right? It's consolidation. You can see why the price I'm not interested, because you can see the price make move lower, respect this demand, then it move higher, right? You get induced buyer comes in at the same time, you stop out all the stop loss above. They move even higher, get the stop loss here and fill the gap, right? And also stop loss here. So once the price move higher, all these stop loss and gap all get filled, right? Two birds with one stone. And what happened is the price move lower, right? When the price move higher, this move, they have induced a lot of buyer comes in. So when the buyer start to come in to buy, where they put their stop loss is at the swing low, okay, at the swing low. So the bank move lower, stop up, stop out. Now it move higher. So it can, again, like I say, it is stop hunting. So when it is in the stop hunting, I don't want to be hunted, right? So I'd rather not to participate. I want to let the bank show the way, show me the way where you want to go. Then I start to analyze again. But basically, I already have idea what I want to do with this pair. I want to short and then I want to buy. But I want to short only when the price go to the level I want to short, which is this supply, right? So I want to see the price come to this area, then give me the pattern I need to see, break, right? When the price pull back, then I sell, stop loss, take partial profit, find the profit. All right. So that's what my plan for this pound yen. Now look at these two swing low. It's the perfect alignment. Can see that? Perfect. Double bottom. This is specially created so that there are a lot of uninformed trader thinking that this is a very, very strong support, and they start to come in to put the buy limit when the price come here, and they expect the price to just go up so they can take profit, and their stop loss is below. Okay, so already there are many stop loss below. Okay, so what the bank specially engineer this low, because the bank knows that they need to move lower to fill all these gaps, right? So they need to stop these people out. Okay, so I think very likely EJ is going down, at least to get all this. But before, I just hope that before it go down, it go up first. It go up first, and then over this area, I will take a shot, right? So you can see that the risk reward will be fantastic. Okay, let's take a look at the risk reward. If I short somewhere here, assuming and the stop loss above that high, I just take the profit of this low. If I just aim for this profit, I'm talking about risk reward 1:6. 1:6, right? So do I want to take this trade or not? Yes, the risk reward is fantastic, even though I know I'm a counter trend, because the risk reward is very, very good. Okay, so if I manage to take a short there, let me go to 4 hour. Now remember, I said that price might even come down lower. Tap on this demand, so it might even come down all the way lower. If it come down all the way lower, the risk reward is 1.8 before I start looking for long, right? So that's the reason why I'm very, very keen to look for a short. If it go to the level where I want to short, and then give me the price pattern I need to see. Okay, but if the price, let's say if the price move up to this area where I want to sell, this is a supply I'm looking to sell, but it did not give me the pattern I need to see and continue move higher, then obviously there's no trade here. All right, then the next level will be this supply. When the price come in here again, I'll be looking for a sell here again, right? If I see a sell, I will sell. If I don't see the pattern I need to see, then no trade. Then the price going higher, then I look for this, the final supply. Okay, so imagine if I can take a short here, stop loss here, so the risk reward is all the way down. Fantastic. If the price go up there and then reverse, right? Let's take a look. If we able to get in, don't mention here, just on the second high. Let's say about high here, we manage to get in. Our stop loss above, target all the way down to here, to this demand. Okay. Oh, sorry, this is a 4 hour, no wonder. 4 hour time frame. I see how come so little. 1:5 risk reward. Okay, 1:5 risk reward. But this is 4 hour. It's not unreasonable. Use 4 hour. Okay, so that is my plan for the pound yen. Any question? So these are the three pair. Like I say, tonight I'm looking at only the yen cross because I think I'm risk on. Wow, Cameron is too long. Wow, you have a lot. You have good patience. You have good patience. Oh, very good. Go have opportunity, is it? Okay.
It looks interesting now, but it looks like it's trying to close the gap. Yeah.
Wow. Look at this. Wow. A long accumulation, and now it break out. Okay. Look at this. Wow. Yeah. In this time, it looks like this is again, looks like it's a distribution, right? After a long uptrend, we see the price sideways. It looks like distribution, but after distribution, it can break higher again, right? That's why I say that don't always assume that distribution means the price has to go down, because distribution, the price can break higher, and this become a redistribution, right? Okay, so this is a distribution. You can see the price rally up, up trust. Now, what we might see is this. What we might see is this might develop into Let me see. This is buying climax. This is the up thrust. Okay, this up thrust stop out this buying climax here. Okay, and this is the preliminary support. This is automatic reactions. So we draw a line here. This is the support for the range. So now this could be a what? Okay, so you don't see the price going up. You might see the price go up and then pull back, right? And then now it become a really a trust followed by Utah, and then last point of supply, last point of pump down. Okay, it can happen like that. Okay, so we pay attention to this area. See whether this developed to become a Utah or not. Now, why the price goes up here? Because it was looking at this one. Swing high, because above there's a stop loss. And here the gap. Okay. Now, I don't think the price will have so much energy to run all the way up here, because this is the big gap. Okay. 1860. Let's take a look. Interesting, huh? So if you are trading off the smaller time frame, you should be bullish, right? Because price had done the accumulation. After a drop, you have done his accumulations, and it break out this trading range and go through another phase of a consolidation, and then we break out again. So you should go long, right? You should be go long in a short time frame. So let's take a look in the, if you want to go long on this, let's take a see, right? This 1 hour candlestick. So we can't tell whether this is a breakout. Now it's only 8:41. We have another 20 minutes to go before this candle close. So if the candle close as what it shows like this, it means that this is a higher high. And price had taken out this high. Okay, if that is a higher high, price had taken out this high. So now we define where is our trading range. So assuming that this is the price. So this is the, we also see that this break. Okay. So where is the origin that break this high? The origin is this one. Okay. So this is the origin. So this is my range. So if I were going to go long, this is my range, right? So now you know what to do already, right? If you want to go long, you are not going to chase after the price. Wait for price to pull back. Now pull back to where? Well, see, we have this trap order. We also have this trap order. We have two trap order over here. Need to be filled. Okay. So this whole entire range, trap order, trap order. So if you want to go long, wait for price to come here. Look for what you need to see. And then go long here. Stop loss, TP here. Take partial profit and then aim for higher. We don't know, right? So this is your intraday trade for gold. But if the price continue to move higher, what are you going to do? Let's say the price go higher, you just extend your range, right? Because this is, I just use this range because this is what the price right now shows. Okay, that's what I see in gold. But like I say again, if the price end up like this, right? The price can break like this, break this high and make a higher high. But after that, what it might do is you might see the price start doing this. Okay. And now it become a what? Distribution. This become a rally up. This rally is to induce excited buyer like Andy to buy. Right? Because they see a breakout, let's jump in to buy. Now, where's the stop loss? Stop loss here, stop loss here, stop loss here, right? The bank know how we play, right? And then the price after run down all the way, carry all this stop loss, then go up. Okay, that's how they attract the people coming. All right, so we are smarter because you guys in the trading room, right? So we are not going to be trapped by this. We are going to patiently wait for price to come down here, and then if you want to buy, we buy here. Okay, let's go. Any questions? Any question? Lai, how are you doing trading? Do you understand what I say so far? Fong?
Yes.
Okay, good. Fong, can you follow? Fong? Jamie, right? These are all new students. How's your learning so far? Can you understand? Can you follow? UJ, of course. All right. Okay, Jamie, have you traded forex before you join my program? No, but you can follow. Oh, that's good. Have you started trading live, or you still demo? Have you trade live or still demo? Almost burn, is it? You must use your potential, manage your risk. Yeah, remember, what we see here does not guarantee going to be winning trade, right? We're going to have many losing trade, right? But because of the good risk reward, we're going to make it up, right? So if you have a over trade, you can burn your account very fast. All right. So please manage your own trade. It means that risk only 1 to 2%, right? Or the maximum 3% per trade, based on your account size per trade. And then you always look for a trade that can potentially give you at least 1 to 3 if you are hold a trade for a couple of days. But if you are intraday, it is very difficult to look for 1 to 3 because you are intraday trader, right? If you can get 1 to 1, you're very happy already. Take your 1 to 1 because you are intraday trader. Okay. So a very important thing is always make sure that you manage your risk. Do not overtrade. Wow, 4-time ERC. That must be news driven. Yeah? Also, be careful, right? If you have a new, especially if you are doing intraday, and there's a very important news that is about the release, interest rate, non-farm payroll, right? Don't trade, right? Because if you are intraday trade, the movement after those news easily can stop you out, right? And always remember, you need to apply stop loss. If you don't apply stop loss, you're asking for trouble. Okay, so a few things was very important. Always apply stop loss. Risk only 1 to 3% each trade, right? Do not overtrade. Always remember that. Okay, let's take a look at the UJ. What do you see on UJ? Dominic, sell. Where do you want to sell? What level? Which level you got the intent to sell? Dominic, what price you intend to sell?
110.3, Benny.
110.3. Let me see. around there. Okay, let's take a look here. So in a higher time frame, this is 8 hours. If we go to the 1 day, right, we are in an uptrend. Okay, clearly we are in an uptrend. See the high, higher high, right, higher low, right, higher low. So we are clearly in an uptrend if you're trading on a bigger time frame. So now we go down to the lower time frame, like 1 hour. We're in an uptrend before. And this is the last higher low, sorry. They're being taken out. So in a smaller time frame, example 1 hour, now we see this downtrend. Okay, we are in this downtrend. Price pulling back to this, looks like price coming here. Okay, so you are trading here right now, I suppose, Dominic. Now, in 1 hour, we see the price make a high, the price make a low, lower than this low. Okay, and now price is trading in a range. In a smaller time frame, like 1 hour, it is in an uptrend. Okay, but this uptrend again is going to taken out by this. Once this low is being taken out, it becomes a downtrend. So now, if you are looking to sell, wait for this low to be taken out. Once the low taken out, price come back, you can sell, because now you are selling with this downtrend. The red color is, let's say, 1 hour, but this smaller time frame over here, this is a retracement to this 1 hour downtrend. So this 1 hour is downtrend, this blue is uptrend, retracement against this downtrend. Now this blue turn into downtrend again, right? If we break this low, so now this smaller time frame is in line with this bigger time frame. Okay, so but I will prefer to see this low taken out. Now you don't see the low taken out yet, because now it's only 52, another 8 minutes to go. Right, so we need to see where this price close. And now I don't know why you want to sell here 110 and 30. You are selling exactly on this ERC. Okay, you are selling on exactly ERC. I think that is no good. So so let's say assuming the price break this low, and make a lower low here. Okay, now we have defined our range, the high, and let's say the price make a lower low here. Okay, I'm just assuming. Imagine here. So this is the high, this is the low, this is the low that taken out. So now if the price come to this area and I'm looking to sell, now where do I want to sell? I do not want to sell here, because this is a ERC. Okay, so where do I want to sell? I want to sell something which is high, right? So now let's go to even lower time frame, 50 minutes time frame. So where do I want to sell? So imagine, I just assuming the price, this is the low the market makes, right? Because I need to see this low taken out first, otherwise I will not sell. So if I want to sell, when the price is here, I don't want to sell because it's too low. Even here, I don't see any reason you want to sell here, because you're selling exactly on ERC, right? So if I want to sell, before I want to decide what to sell, I want to see, where is there any gaps? Well, I see there's a gap here. I see there's a gap here. Okay, as this is a high, this is a low. So if either a high and a low and there's a gap there, and I want to sell, the best is here. The second best is this one. Okay, so if the price make a low here, and then start pulling up, yes, I look to sell here. But if let's say the price did not make a low here, the price make a low here like this, then selling here become, this is gap, this is gap. So if I sell here, right, still okay, right? Still, actually I'm selling in the no man's land. I still prefer to sell here when the price come here. That will give me a higher odds, stop loss here, and then take target. First profit here. Then second, of course, we can look for more profit. How to know where's the higher profit? We go to a higher time frame, 1 hour. Oh, the higher profit will be here, right? So it's very good profit. So you can sell somewhere there. Stop loss above that high. Target here. One is the 5 risk reward. Okay. So that's what I will see. I will take. But if let's say even if the price go back up, yeah, to this level, to this gap here, I say this is a gap, right? This is a gap. This is where I'm interested. I will not just put a sell limit there. The same thing as the price moving back up, right? I will want to look for price, show me the pattern, break the trading range. Then I take the short. Either stop loss here or here. I will not just simply put a sell limit and stop loss and wait for price to come and trigger my sell limit and continue to go higher and stop me out, right? I will not do that. Okay, so I prefer to use confirmation entry, right? Because if I can watch the market. Okay, that's the UG. Okay, Dominic.
Thanks,
okay, everyone. Okay, no question. We'll end here. Thank you very much and see you again next week.
Thank you, Benny.
Okay, welcome.
Okay, bye-bye.